I'm Ellis Martin. Join me for a conversation with Kyle Floyd, Chairman and CEO of VOX Royalty, trading as VOX on the TSX Venture Exchange and in the U.S. on the OTC as VOXCF. VOX is a high-growth precious metals royalty and streaming company with a portfolio of over 50 royalties and streams, spanning 8 jurisdictions. The company was established in 2014 and has since built unique intellectual property, a technically focused transactional team, and a global sourcing network which has allowed VOX to become the fastest-growing company in the royalty sector. Since the beginning of 2019, VOX has announced over 20 separate transactions to acquire over 45 royalties. Mr. Floyd created the concept, built the team, and raised the capital required to commence VOX's operations as a metal royalty and streaming company. He's responsible for general operations and strategic direction of the business and has helped lead the company to becoming one of the fastest growing mining royalty businesses over the past 2 years. Prior to VOX, Mr. Floyd held the position of Vice President, Practice Lead of the Global Mining Investment Banking Department at Roth Capital Partners from 2007 to 2013. During his time with the company, he led the international OTCQX and cross-border listing advisory group and led business development execution on all mining transactions, ultimately financing and advising nearly $1 billion over more than 60 transactions, including M&A assignments, private placements of debt and equity, IPOs, and follow-on offerings. Kyle holds a Bachelor of Business in Corporate Finance from the University of Washington and attended the Master of Science program in Mineral Economics from the Colorado School of Mines. Kyle, welcome to the program. Nice to have you on the air with us.
Ellis, pleasure to be here.
If you don't mind, give our audience an overview of VOX Royalty.
VOX Royalty Corp is a specialist royalty company acquiring third-party royalties all around the world. We have a portfolio of 54 global royalty assets, predominantly precious metal weighted. We have a core expertise in finding royalties held by disparate sellers all over the world. We bring those in aggregate for our shareholders, and we do it at great value in terms of building a portfolio for our business and for our shareholders.
As I understand it, 75% of your portfolio resides in Australia. Explain that if you don't mind.
We've focused on Australia because we believe it's the best mining jurisdiction on the planet. It's also where we have specific intellectual property advantages. We also have intellectual capital advantages. There is 3 of our key business development executives are Australian citizens. And by virtue of gold being the most explored for commodity since the beginning of time, and a tremendous amount of exploration that's been done in Australia over the decades and over the centuries, there are more gold deposits that we can find royalties over. And so it's created this nice organic focus on gold royalties and also a focus on being able to find royalties at great value.
When the gold market is flat like it has been for the last few months, do you increase your exposure in other ends of the sector like battery metals or base metals?
It's a great question. We don't chase what's running. In fact, we prefer to be buying what's not running. And that's where the database and our intellectual property advantages and our ability to find interesting royalties the world over really allows us the flexibility to go after certain commodities and certain royalties that have not realized what will be a full value yet in terms of the purchase price that we will have to pay. So we don't like to chase what's hot. We actually like to chase what is fundamentally good value, first and foremost, over great assets, because great assets win at the end of the day, and great assets will win whether commodity price is up or down. Bad assets will only win when commodity prices are high. And so we look for quality assets at good valuations, and our business gives us the flexibility to do that very, very well.
What stage of development are these assets in? Are they greenfield? Are they brownfield? Is there a mix? And how important is it for these assets to go into production quickly? Or do you have patience?
What we target are royalties or projects that are anywhere from 3 months to 2 years out from production. That's our core focus and what we're looking to find when we are looking at assets. That being said, sometimes we'll go a little bit earlier and sometimes we'll actually buy something that's in production. But it all has to be done at a value that's accretive across really 3 key areas of financial returns for our shareholders. That's net asset value, that's price to cash flow multiples, and that's an absolute bottom line risk-adjusted return on the asset. Most royalty companies don't look at their investments that way. VOX does, and it's because we have the capability to do so in finding value globally. But that focus is really on late-stage development assets where our mining engineers and our geologists who are on the front lines of our business can pick really good assets that have really good royalties over them and bring those into our portfolio.
You have something which I haven't come across before, and I think it's really interesting. I'm going to call it a bit of a secret sauce. Your acquisition, I believe, last year of Mineral Royalties Online with a proprietary database of 7,000 global royalties and 500 historical royalty transactions.
That was a really exciting transaction for our business and our shareholders. And frankly, at the time, it felt like a very, very big purchase price. We paid $2.1 million to acquire that database and acquire the team that built it, and Spencer Cole and Rian Easter, who were two of the most sophisticated yet under the radar individuals in the royalty sector. This database was built through first principles. What does that mean? That means going to mining ministries, mining cadastres, exploration offices all around the world and working deals and pulling in that hard copy data and digitizing it. A lot of that data no longer available, probably anywhere. That's a huge proprietary advantage for us. But one thing to really understand about this database is it's not a static document. We continue to build on it, but what it's really used for is we're scanning the globe every minute of every day, essentially. We have people all over the world. We're really a company that doesn't sleep, looking for projects that have interesting developments and interesting technical qualities that we believe present a very, very good risk-adjusted opportunity for us to purchase a royalty over. And so the database allows us to take a project and then see if there is a royalty over it, see if there's reserves over it, and see who the owner is. And so it really just helps speed up the process. In some cases, it does just present a royalty opportunity, but a lot of times it's really leveraged to take a good project and understand if there's a royalty over that we can purchase.
I understand that you're finding royalties that not even the owners of the property are aware of. How does that even happen?
Those are some of the most interesting discussions that we have and interesting opportunities that we find. So VOX has purchased royalties from a telecommunications business, from a hearing technology business, from an automotive parts company. We've had deals lined up to buy royalties from construction companies. You would not believe the disparate group of sellers. We've had a doctor in West Africa that held a royalty that was very interesting, that unfortunately, get into some more detail later, but got ROFR'd from us. We have acquired royalties from probably the most eclectic group of sellers on the planet, which means these are non-core holders of royalties. These are non-core assets, which in our situation means there's an interest in transacting. You have to figure out what fair value is, but there's an interest in transacting. So that's been really helpful for our business. And a lot of this is essentially informed by the database. It says who the owners are. It gives us enough detail to know that there's a royalty there that's not in the hands of anybody else. And then our deal sourcing agents help us connect with these disparate companies, disparate owners all around the world, and have a personal connection with the seller, and enables us to transact in more volume at better value than anybody else prior to us.
Certainly sounds exciting, and I've not heard of this before. And it's proprietary, which means you own it, nobody else does. So you know about opportunities that nobody can really have access to.
Yeah, and it's interesting. And we were a first mover in that capacity. We knew that there would be copycats. There was a royalty company that came out yesterday that announced that they acquired some sort of IP over royalties. I won't name who they are, but I would really challenge them on what IP they acquired. And we were out building IP and looking for whoever else could have done it better or was more advanced than us. And we found it and we paid for it. We didn't do it because it was an in vogue statement to make. We did it because it was a fundamental advantage for our business. And I think our ability to find royalties in non-brokered situations with disparate counterparties the world over has obviously demonstrated the value of that database and has added a significant amount of value for our shareholders and will continue to do so.
One thing I've noticed about you and your company, and in all the years I've been covering this mining sector, is that you really pay attention to so-called competition. I exist personally in a world where I don't look at competition. Of course, everybody's going after the same dollar, and I guess that's when you have to consider competition, but you're kind of focused on it. Why is that?
We're actually focused on being where there isn't competition, but you have to know where your competition is and what they're doing to make sure that you're in the right places or ahead of everybody else. So you cannot be blind to competition. I don't think you can be blind to competition in any industry. And so we certainly aren't. We pay attention to what our competition is doing. We understand what they're looking for, but we fundamentally started building this business with the motivation and with the keen understanding that we needed to be in uncompetitive waters. And we needed to be able to find the right deals for us at the right valuations. And if you're in the ultra competitive market that royalty companies are, where most are just competing on cost of capital, it's either not likely to be a success or not going to yield the returns that a company like VOX can. And that's what we focused on. So we focused on building our competitive advantages. And to the best of our knowledge, we have not won a competitive process yet purchasing a royalty. So we have been the only buyer at the table to buy these royalties. And that means that we're achieving fair value typically for both seller and buyer. Whereas most royalty companies have grown by participating in processes run by investment banks, paying higher price than anybody else. If anyone tells you they win something by doing anything other than paying the highest price, they're not being straightforward with you as an investor. They're paying the highest price to bring those royalties. Sometimes that works, sometimes it doesn't. I think there's a winner's curse that's been around for centuries in terms of shop processes and winning those types of opportunities. It doesn't typically work out well, at least on the average, for those buyers. Our belief is we have to be in uncompetitive waters, but to do so, you also have to know what your competition's doing.
Fair enough. And in that, you consider yourself the fastest growing royalty company. Why is that?
We are. We've acquired more royalties in separate transactions than anybody else over the last 2.5 years. That's not our claim to fame. Our claim to fame is the value that we're finding royalties and the validation that we've had in our business. And you can see that in our last quarterly results in terms of doubling revenue guidance, where we're finding assets pre-production where we see really good value, and then having those assets perform typically better than we expect and delivering immense value, not just for where we bought the royalty at that point in time, but for the achievements and the developments that they have continuously from that point forward are adding a significant amount of value for our shareholders, and they're performing beyond expectations, and that's driving excess returns in our business.
How involved are you with the partner companies that are taking on your projects?
So we're a little bit different. I know you've had other royalty companies on the show before. We're different in that we don't take on the general administrative expenses of grassroots exploration and then vending those projects out in return getting royalties. What we do is we're a much more advanced phase of royalty acquisition. We believe it's a more efficient business model. I believe if you look at our returns that we're generating on capital invested in our business, that proves out. What we do is we only exclusively buy third-party royalties. So we're looking for typically assets in a much later stage of development or much more significant work done. We're not paying to buy those assets and those land packages and then hoping that we can find a buyer. We're buying a royalty that's held by a third party, so not the mining company that's operating it. And that allows us to look at royalties all over the world. So we can find projects that we like and see if there's royalties over them. A lot of times we're screening for developments on those assets that our mining engineers and our geologists find particular and interesting and value accretive. And then we go and we look for the royalty of those projects. So it's a much more late stage. You would call that type of royalty company a project generator. We're not a project generator. We're exclusively a third-party royalty acquisition company.
I noticed your team is heavily loaded with mining engineers and geologists.
We are, and that's on purpose and it's by design. Despite my former investment banking background, we are not in the business of doing deals for the sake of doing deals. We're in the business of finding value for shareholders. And the best way to do that is having a very technical understanding of what assets you're buying royalties over. And if you can't understand the asset at an asset level, then you're not as informed as you should be. And you can look at a lot of deals that have been done in the space where the asset was not well understood and the risk for the expected return did not line up and it did not work out very well for the royalty companies. We went about building a team that had the right technical chops to understand what we're buying, and they demonstrated, and we've demonstrated that we have a very, I would say, a validated capability in that respect in terms of finding value for shareholders over great assets.
You briefly glossed over your background, but I'd like to discuss it with you. You have a background in investment banking and brokered transaction. These are things you don't necessarily like now. You know what to look for and know what to stay away from as you run this company.
Yeah, and also a stint at Colorado School of Mines. But look, I founded this company to drive better risk-adjusted returns for investors. We started with a $7.5 million investment from a family office that understood what we were going to try and accomplish. It was an early stage idea. It was a belief that we could create a niche in the royalty space. But it's also understanding that bankers are serving the sellers. They're not serving the buyers. As much as I do have respect for the industry and I consider myself a reformed investment banker in some respects, that's not what drives our business. What drives our business is finding and creating value. I always felt as an investment banker, I was hamstrung in that capability, in that you are a part of the transactional process and certainly enhance value for your clients, but you're not part of the integral value creating process. And that was something that really I felt frustrated with. The risk-adjusted returns of most junior miners do not stack up. And I wanted to create a vehicle. I believe more people should have commodity exposure, especially with the inflationary backdrop, especially with the risks that are out there in the economy today. This looks and feels a lot like 2006 to 2008. And that's when you want to be in commodities. So we were built for a time like this. It was a lot of those experiences as an investment banker, helping finance mining companies that ultimately did not deliver the returns that investors would have expected for the risk that they were taking on or risk that they didn't know that they were taking on. And VOX was built for that purpose. So we are a purpose-built company to solve that hole for investors of, I want commodity exposure, but I want it in a sensible risk-adjusted way. And I believe we accomplished that.
Do you see a 2008, 2009 event coming?
You know, I'm not a market prognosticator. One of the things we do in pricing royalties is we take a lesser price than where metals are currently traded. My personal viewpoint is sadly yes. And that's not going to be good for most people on this planet. And so while we're building a business, we don't factor in an expectation for higher metal prices. and a 2008 type of implosion. And that implosion was very good, consequently, for gold prices. What we do is we look in and say, our investors should make money no matter what the metal prices do. The metal prices should drop and our investors should still make money. That's how we price our deals. So when you're looking at where to make an investment decision with exposure to commodities, you can buy lottery tickets. That's not how we play our business. We play our business to achieve the best risk-adjusted returns in what we believe is the best format for exposure to commodities, which is royalties. And we built our entire business model around delivering that for investors. So while I personally do think that there's a very good chance of a 2008 type implosion, and that's sad for almost everybody on this planet, we built a business that if that does happen, we should be unbelievably successful, well beyond any expectations. But even if that doesn't happen, we built a business to be very, very successful for our shareholders in creating value.
Well, certainly gold production doesn't shut down in these instances, and that's where your company offers the least amount of risk as opposed to exploration and development companies in the sector. So let's talk about cash flow. What have you got and what's coming?
We're at a really exciting point in our life cycle as a business. When we went public, we had one production stage asset. That was just May of last year. We're a very unknown company in the space. And I believe we're working on changing that for the benefit of shareholders and potential investors out there as well. But we went public with one production stage asset. We now sit at 5 production stage assets. We expect to be at 10 production stage assets in the next 12 to 18 months. That's significant growth, and that's what drives revenue growth and cash flow growth. We have turned the corner in terms of operational cash flow positive. We actually announced earnings per share of 5 cents per share last quarter. That will probably balance out a little bit, and that was just an unbelievably positive quarter for us. And we also sold 2 royalties that were non-core that we thought could be better valued in a specific royalty company called Electric Royalties. So we're excited about that partnership. But we have built a business model based on delivering revenue returns to our business at a risk-adjusted level that is very attractive for the capital that's been invested.
Perfect. What's the share structure of your company?
So we have a very tight share structure. And for most of your listeners and viewers, they're probably accustomed to mining companies doing what's called a reverse split. So they shrink the shares outstanding because they grow shares so fast by highly dilutive structures and capital raisings. When we went public, we actually forward split the business. So we started this business in 2013, formally incorporated in 2014. Started with about $7.5 million from a family office. We grew it, bootstrapping the business with friends and family money, and essentially did it so successfully that we forward split the stock when we went public. So we have 39.5 million shares outstanding. We have 5 million warrants that strike at $4.50 per share, so significantly out of the money right now, and no debt, and plenty of cash to execute transactions and continue to grow our business. Meanwhile, we have positive cash flow. So it's been a very, very successful last 12 to 18 months for VOX that has not been reflected in our share price. And I think a lot of that has to do with us being a relatively new story, certainly on the street.
Cantor Fitzgerald and Red Cloud have you at a very nice buy rating. Of course, we're making no recommendations on this particular program, but how do you respond to that?
Well, I think we've spent a lot of time with those analysts and they know the space very well. And I think they've seen our capabilities and the validation of those capabilities and understand that, to be honest, right now, the assets that we have in the portfolio are deeply undervalued. We trade at about 0.7 times net asset value, while our closest peers trade in the 2s. So that's more than a 3x type of relative valuation that our peers are trading at versus where we're trading at. So that inherently presents a re-rate opportunity. That's not giving credit for what I believe is the validated credibility of our business in finding deep value on a continual basis in the royalty sector, while every other royalty company out there is predominantly paying top dollar for what they're bringing in and winning competitive processes. We also do not have any value, or at least no value premium ascribed to what is the second largest holding of hard rock royalties in Australia, the best mining jurisdiction on the planet. We have the second largest holding of hard rock royalties to Franco-Nevada, and we trade at a discount. To me, that doesn't line up with just the true tangible advantage that that's presenting to our business every single day because of that portfolio that we built. So I think their numbers, look, they speak for themselves. I believe we have a lot of room to prove them right. Their price expectations are higher than where we're trading now, but I think we have room to grow beyond that. And we're working hard to bring that and surface that to the market.
Well, there's so much to address here. I'm going to leave that for our next interview. It's been a real pleasure chatting with you today, Kyle. I look forward to more interviews like this in the future. Thank you so much for joining me today on the program.
Likewise, Ellis. It's been fun and a pleasure, and looking forward to our next opportunity to speak together.
I've been speaking with Kyle Floyd, Chairman and CEO of VOX Royalty, trading as VOX on the TSX Venture Exchange and in the U.S. on the OTC as VOXCF. For the complete story, head to the company's website, voxroyalty.com. I'm Ellis Martin.
Would you like to be one of the first to see who we are following? Subscribe to our audio newsletter. It's free. EllisMartinReport.com.